Hey guys, Mike here. So I got another jam-packed video filled for you, a lot of research and a lot of charts to show you, which, some of them can show you like, hey, this is how we can have a blow off top. This is how this can happen, right? Or, hey, this is why the market isn't actually, if we bottom in October, it's the weirdest move up we've ever seen from bottoming. And I mean, if you go back to the 70s to now, you have never seen a bottom, if that's the bottom of October, like this one. Okay, of course, you've never seen a market like this one, right? Where all of a sudden we bottomed, even though we're still raising rates and all this other stuff's happening, right? And that's why I think it looks like it does. But when I show you this information, you might say, oh, well, that makes sense. And I'll show you exactly why that's happening, right? And then we'll go into the charts, and at the end, I'll show you something. If you ever wonder, I share this with the members, but if you ever wonder how the rich stay rich for generations, I'll show you how that is, and maybe you can start it with your family. But I'm going to start by updating you on this, because I always told you I'll keep you up to date on the margin debt, right? Because this is one thing you need, is leverage to be in the market, to have these crazy moves up from bottoms and things like that. You can see we had the pop in January, actually went down in February. Again, you see percentage-wise, but if you look back at the last 2 or 3, you can see you get these big moves up in margin because we started taking on a lot more risk. We're like, yay, and that starts driving the market up like crazy and stuff. So, it's just something we got to keep in mind. I'll keep updating you. This is a lagging indicator. Yes, I know it. But again, you don't see no huge blow-ups here happening in margin right now. And you have to have leverage to actually see this unfold. It's something you see in crypto a lot, right? And so, the good news is money flowed back into ETFs in April. You're seeing a decline from February to March, and then a big pop in April. So money came flying back in, which is a good thing, which is kind of surprising in a way, right? I mean, you've seen the market really hadn't done much of anything, but money flowed back into some of the ETFs, which is a good thing. And now this leads me to some of the charts I'm talking about. So the positioning right now, this is E-mini S&P 500 net non-commercial futures positions, right? And we hadn't seen it like this since 2011. And so a lot of net positions are short right now. And then when you look at the spread between the text overbought / oversold readings and price and breadth, which is a big thing to understand, you can see we're right there. That's the same as it was in April 2018. April 18th, 2008, excuse me. And then right below July 21st, 2011. Now, what happened during those days, right? Well, in July 2011, you can see we had a major sell-off, right? It's about 18% in a matter of 18 days. Now, here's what you got to understand. Always look underneath the hood. What happened? The debt ceiling happened. That's what happened. Government being stupid and end up having a crash like that. Now, 2008, what happened? Ended up moving up about 4% and then falling off a cliff. So, kind of a big difference. Can mean something, don't have to mean something, but it's just something to understand when you're talking about these recoveries that we're supposed to be going through and stuff. And if you go to the right, it just kept selling off, and we were actually in recession at that point in time. Now, this is the one that interests me the most, though. I mean, you've had to look at this recovery and say, my Lord, for it's supposed to be a bottom in October, we sure aren't moving very much, right? And when you look, this is the S&P 500 index, percentage of members with new 52-week highs. And you can see the dot-com bubble. You can see '08. You even go over here to 2018, which is only a 3-month sell-off. It only got down to like 19.98%. You see where the height of that is. You see 2020, right? You can even go back to 2015, 16. Right, we had a sell-off. Wasn't some crazy, nothing going on really, but we did. And then you compare that to now. And it's like, boy, that's pretty anemic, right? I mean, that's the new 52-week highs. And that's why we've been sitting here kind of like up and down, up and down. I think it's the bottom. No, it's not the bottom. Oh, my God. Or, interest rates starting to take effect now. But the reason why I think you're seeing this, because normally in a rally, you see everything just participates and just starts moving up. And the market just moves up and shorts are getting destroyed and everything else. But what's happening is the zombie companies, that's the problem. You can see they aren't participating at all because this is the worst kind of market for them to be in, right? Where high interest rates, debt's going to cost them a lot when they got to refinance. A lot of them are going bankrupt, that type of thing. And I think you're going to continue to see that. But, what's been happening, big caps, that's what's been, basically bringing up the market. It's like 88%, I think, of the Q's rally was just like 10 stocks. I've showed you that multiple times. And that's just something you just don't see in the other rallies we've seen. Not saying that's going to mean something. I'm not saying that wasn't the bottom of October, really. But I'm just saying, every rally is different. Every, bear market is different. but this one is definitely the weirdest one of the group. That is for sure. Let me know what you think down in the comments about all that. And before we continue, guys, if you're getting anything out of this, please hit that like and subscribe button. Think about sharing the video with your friends and family. And if you're new here and you like the content, please hit that subscribe button. I really appreciate it, because I do like to get your feedback and stuff. But yeah, I was looking at the chart too. I was kind of looking at this recovery, and I went back to every single one: 2020, 2018, 2015, 16, 2011, 2008.com. Then I went all the way back to the 70s. And it's just different. I mean, when you bottomed, you know, and then some of them were double bottoms, right? It bottomed, came up, bottom, but you just see this jettison. And I put on the weekly chart, and you just see this 4, 8, 12 weeks of just straight up, right? Where everything's just taking off like a bat out of you know what. And so that's just not the case here, because there's a lot of uncertainty. And the other reason is because there's so many alternatives. I'm going to cover a few of those tomorrow, and not just treasuries and savings accounts, things like that. But I'll show you some other ones as well. And that leads me to the charts. I'm going to start off with IWM, right? And IWM is about to have a death cross, right? And so I've talked about the golden cross, the death cross. The reason why that's not a big deal, and I want to talk about IWM for a second, you'll see people trying to scare the brakes off of you in Twitter land and everything, is because IWM, I told you this months ago, for those who have been with me, is this happens for IWM. The reason why is because it trades for months in like a very close range. So those moving averages stay very close together, and all you need is a small move down to cause a death cross, versus a small move up can cause a golden cross, which is what it's had before. And we'll see if that happens, but I don't even sweat that too much, because, I mean, IWM is what it is. It trades differently than the other exchanges. Now, S&P, what's happening? Nothing. Up 0.1%, holding for earnings. That's pretty much what this is doing, waiting on Microsoft, the big caps, things like that. You can see the MACD is trying to have a bearish cross right there, but this is just holding. I was hoping we were going to get a retest of that trend line right there, but if you look on the shorter time frame, we just couldn't make it up to it. And again, what do you see happening? A V-shaped recovery, right? And so it's happening multiple times, almost every single day, it seems like. You'll get this either gap up in the morning, sell down, V-shaped recovery, or gap down, V-shaped recovery back up to close the gap. And so again, that's nothing new there. The Qs, what's new with the Qs? Absolutely nothing. I mean, it just, look at this right here. And let me know in the comments. You know, we talk about it. Is this accumulation or is it distribution? Accumulation means we're heading back up or heading back higher. Distribution, heading back down. Okay, and you can see already had your bearish crossing the MACD. The RSI is still trending down. Just no momentum there at all. And so we'll see if these earnings can absolutely have a positive effect, or will it just be a kind of like a blah event no matter what they say, right? Because you can't imagine somebody will come out and say, oh man, this year looks great for any company, really, but especially going into the second, third quarter. But, you know, there's still Microsoft showing weakness, right? It's sold off the last few days here. Major resistance with that trend line and that overhead supply right there. It's a lot to get through. Your MACD, of course, already had its bearish cross and stuff. But, you know, shorter term time frames, you know, it's trying to move back up. But people are just waiting, because guess what? They got earnings tomorrow. You know, why jump in front of the train if you ain't got to, right? People think they'll do better because they do have a subscription model, which tends to work better in this kind of environment. But we'll have to see. Now, Tesla down a little bit today, right? Basically gave back its gains from yesterday. And it's just kind of hovering there between those two gaps, right in between the middle of the weekly move and stuff. But understand, what's the catalyst? That's what you got to ask yourself. Because remember, Elon Musk said on the call, he is willing to lose money on every single car to gain market share. So they're kind of doing the Apple strategy, where they just want to put their products in other people's hands. Plus, they even said the capital spending plan is to at least $7 billion. So they're not cutting anything, right? And so what companies are getting rewarded, like Meta and all the rest of them? Cutting spending. That's what the market wants to hear, and Tesla's doing the opposite, and they're going to try to do the Apple plan and really just try to crush the competition and gain market share. Question is, you know, hopefully it works out, but how does the market take that, right? Because now all of a sudden you're cutting your costs on your cars, so you're squishing your margins. You're going to be bringing in less money, but spending a whole boatload, right? And so we'll have to see what this does to the stock price. Again, you know, it's all about big money, not what we think anyway. Now, earnings, of course, as we talked about, it's 42% of the S&P reports earnings this week. I believe that's the correct number. And you can see in the morning, it's going to be busy, busy, busy. Verizon, UPS, Halliburton, GM, McDonald's, and which, by the way, McDonald's set new 52-week highs every day. I can't wait to hear those earnings. 3M, PepsiCo, Spotify, Raytheon Technology. So just loaded, right? And so it's going to be interesting to see how the market does in the morning. Then you have the big boys afterwards: Microsoft, Alphabet, Enphase, Visa, Chipotle, my Lord, Texas Instruments. I mean, just loaded tomorrow. And so, after that, we'll have a lot of earnings, but I don't think any of them are as big as that. I mean, maybe Amazon, maybe Meta, but I mean, that's just an enormous day tomorrow. Won't be too bad as far as economic data. You're going to building permits coming out, housing prices, all about the real estate, that kind of stuff. S&P, Case-Shiller numbers will come out. More manufacturing data, which of course today's manufacturing data was horrible. And you also have some coming out of Dallas, I believe. And so, looking at that, we'll see what happens. But the manufacturing data today didn't seem to phase the markets too much. I mean, I think people thought it did, but I think the market was going to just kind of trade sideways. Market makers are going to be like, we ain't paying no premiums and nobody. And just grind it until we hear what, Microsoft, Google have to say. And it might not even be about the earnings. That's the thing. I mean, we've you need, a push up, but understand, why can you have a blow off top like the gentleman talked about yesterday? What did I show you about those net short positions, right? People get short and they get squeezed out, and you see these major runs, right? That's what happened. We've seen it how many times? 4 times already in the last 12 months. And so people start shorting, and I don't mean buying puts. I mean, they're actually shorting the stocks, right? And then all of a sudden they get caught, and they have to start buying back that stock. That's what happened to Tesla, right? They say, oh my God, we got to start buying back stock. And then everything starts moving up, and then people start buying calls, and then the market makers have to sell them the calls, and then they have to hedge and buy the stock, right? And so that keeps it moving, right? And so don't be surprised at all. There's a reason why the S&P is hanging around where it's hanging around at right now, right? That's just the way it is. It just needs that bump up. And then when it breaks February highs, if that's the case, depends on, I guess, the earnings, we'll see, then of course that gap's right above it. There's a reason why it's sitting there, and we'll just have to see, right? I mean, again, I always say the big boys are going to do what they want to do, all right? When they're positioned just right, they'll move the market how they want to move it or whatever. But again, to have one of those like 2011 I just showed you, where it goes straight off a cliff, you're going to need a catalyst of some kind, right, to do that. I mean, you're going to have a lot of sellers to pull that one off, and that was the debt that I think we actually did. We didn't default. We came close, and our debt got downgraded, I believe, in 2011. Please correct me if I'm wrong on that, but I believe that's what happened. Now, if you want to understand, and I'm going to put this link in the description below the video, how the rich stay rich for generations, it's actually ingenious. I mean, they're not breaking the law or anything. They bribed illegally the Congress to pass these laws, okay, so they can do this. And basically what happens is, this is how they avoid taxes, which we're talking about just millions of dollars, right? They avoid doing this. So they buy assets and hold to avoid the capital gains tax, right? Then they use the assets as collateral to borrow money while those assets appreciate. Then that interest they're supposed to pay on the loan is a tax deduction, right? So they get to write that off on their taxes. Then when they pass away, there's a way they do this. They pass on the assets tax-free. And if you click on the link and stuff in the bottom, it'll tell you how to do it. But this is also something that the executives do, right? They have all the stock. Well, they actually borrow against the stock to live on or take and do investments and all kinds of stuff, right? They don't. That's why they avoid paychecks like it's the plague, right? Because they don't have to pay all those taxes. And then the biggest part, though, I didn't know about was then when they pass it on, right? Because I'm not getting anything passed on to me. But when they pass it on, how they do it, and their people they're passed on to don't have to pay taxes, right? Like off how they do it. It's amazing. But just click on that link. So, maybe that can be you. Maybe you can start passing on generation to generation and build wealth. It's like, who was it? I'm trying to think, one of the comedians, Chris Rock said, Shaquille O'Neal's rich. The man signing his paychecks is wealthy. That was Dr. Buzz. He's gone now. But, rich is something you can lose on a bad drinking spree in Vegas one weekend versus wealthy. You can't lose that in a weekend, right? I mean, so again, something to keep in mind, moving us on up, right? And so I just wanted to share that and stuff. And again, I'll put the link down the bottom for you guys. So if you got anything out of it, hit the like, subscribe button. Let me know what you think Microsoft and Google's going to do tomorrow, up or down. All right. I'll see you guys then.